This week could decide Bitcoin's next major move. A sudden 5% drop. Trump's tariffs back in the spotlight. The U.S. Supreme Court shaking up trade policy. Escalating U.S.-Iran tensions. And one earnings report from Nvidia that could either ignite a rally or trigger another sell-off. Bitcoin is no longer trading in isolation. It is now deeply connected to global liquidity, geopolitical risk, and Wall Street sentiment. So the real question is this just a temporary macro-driven pullback, or is Bitcoin setting up for a deeper drop toward $52,000? Let's break it all down, calmly, factually, and without hype. Weekly overview. What just happened? At the start of the week, Bitcoin dropped over 5%, falling to approximately $64,600. The sell-off mirrored weakness in U.S. futures markets. This was not an isolated crypto event. It was macro-driven. Markets shifted into what traders call risk-off mode. When investors move into risk-off positioning, they reduce exposure to volatile assets like growth stocks, AI names, tech equities, and Bitcoin. At the same time, safe haven assets such as gold tend to strengthen, and that is exactly what happened. Trump tariff shock. Why it matters. The turning point came after the Supreme Court of the United States struck down major parts of former President Donald Trump's emergency tariff framework. Initially, markets reacted positively, but the relief didn't last long. Trump quickly announced a temporary universal tariff, starting at 10% and later lifted to 15%. This reintroduced two major macro fears: slower economic growth and higher inflation. Tariffs reduce global trade efficiency. They increase import costs. They pressure supply chains. And when growth slows while inflation risk rises, markets become unstable. Bitcoin trades like a high beta risk asset during macro stress, so it followed equities lower. Meanwhile, gold rallied. That divergence is important. It shows investors are prioritizing capital preservation over speculation, at least for now. Geopolitics, the Iran factor. Trade policy was not the only concern. Geopolitical tension between the United States and Iran also resurfaced. However, there is nuance here. Oman confirmed a third round of U.S.-Iran nuclear talks in Geneva, scheduled for Thursday. That introduces both risk and hope. Markets dislike uncertainty, but they also price in potential de-escalation. Oil prices eased slightly after a strong move the previous week. That cross-asset behavior tells us something important. Investors are cautious, but not panicking. Bitcoin in this environment is reacting more like tech stocks than like digital gold. That correlation matters. Now we move to what could be the biggest volatility event of the week. On Wednesday, Nvidia reports earnings. Nvidia is not just another tech stock. It is the bellwether of the AI trade. Institutional investors are watching three key metrics: revenue growth, expected around 67% year-on-year, profit growth, expected around 71% year-on-year, and forward guidance on AI compute demand. If Nvidia beats expectations and raises guidance, AI stocks could rally, growth tech could surge, risk appetite could return, Bitcoin could bounce strongly. However,
if Nvidia disappoints, even slightly, semiconductor stocks may sell off, AI momentum could weaken, Nasdaq futures could drop, Bitcoin could follow. Bitcoin has become increasingly sensitive to liquidity cycles and tech performance. This is not 2017. Bitcoin now trades within the global macro ecosystem. Technical analysis, bear pennant breakdown. Now let's shift to the charts. On the 4-hour time frame, Bitcoin formed what appears to be a bear pennant pattern. A bear pennant forms after a sharp drop, known as the flagpole. Then, price consolidates inside converging trend lines. Volume contracts during consolidation. The pattern completes when price breaks below support with rising volume. And that is what we are seeing. Volume is expanding on the downside. That suggests conviction. Using classical technical measurement, we take the height of the flagpole. We subtract it from the breakdown point. This gives a projected downside target near $52,450. That aligns closely with Bitcoin's realized price. Realized price represents the average on-chain acquisition cost of holders. Historically, Bitcoin often revisits realized price during corrections. If price falls toward 52K, that would represent roughly a 19 to 20% decline from current levels. It would be painful, but it would not be historically abnormal. What could invalidate the bearish scenario? For bears to stay in control, Bitcoin must remain below $66,500. Nvidia must disappoint, risk-off sentiment must persist, and macro headlines must remain negative. However, if Bitcoin reclaims $68,000 with strong volume and Nvidia delivers strong AI guidance, we could see a sharp short squeeze. Markets are currently positioned cautiously. That means upside surprises can trigger aggressive rebounds. What to watch this week? This week revolves around 3 pillars: trade policy developments, geopolitical headlines, and Nvidia earnings. Bitcoin is sitting at a crossroads. Short-term structure is fragile. Macro environment is uncertain. Technical pattern is bearish. But volatility creates opportunity. Professional traders will watch volume expansion, correlation with the Nasdaq, gold strength, and dollar index movement. Bitcoin is no longer just a crypto story. It is now a global macro asset. And this week may define whether we stabilize or accelerate toward deeper correction levels. Stay calm, stay data-driven, and always manage risk.